Right now, while most retail investors are chasing the same overcrowded mega-cap tech stocks, there's a pocket of opportunity hiding in plain sight. I'm talking about stocks trading under $5, with real businesses, real revenue, and catalysts that could drive exponential returns in 2025. And here's the thing. One of these companies just hit a milestone that Wall Street completely missed. I'll reveal which one in just a few minutes. But first, let me show you why these aren't your typical penny stock pump and dump schemes. These are real companies with institutional backing, government contracts, and game-changing technology. So stick with me, because by the end of this video, you'll understand precisely why smart money is quietly accumulating positions in these three stocks right now. Before we dive into the specifics, let's address the elephant in the room. The SEC officially classifies any stock trading below $5 as a penny stock, and that classification exists for good reason. These companies typically have lower market caps, higher volatility, lower liquidity, and significantly greater risk than blue-chip stocks. When a stock is trading at $2 or $3, a $1 move represents a 30 to 50% swing in either direction. That volatility cuts both ways. You could see substantial gains, but you could also watch your investment evaporate overnight. This video is purely educational and informational. I'm not a financial advisor, and nothing here should be construed as personalized investment advice. Do your own research, read SEC filings, understand the business models, and never invest more than you can afford to lose entirely. With that foundation, let's examine three stocks that have caught my attention based on verifiable data, real catalysts, and significant upside potential if they execute their plans. The first stock is Plug Power, ticker symbol PLUG, currently trading around $2.23. And I already know what you're thinking. Hydrogen companies have been a disaster for investors. Plug's revenue actually dropped 29% last year to $629 million, and they're still hemorrhaging cash, with losses over $2 billion. So why am I mentioning this stock? Because something changed, and almost no one is talking about it. In early December 2024, Plug Power signed a contract with NASA to supply liquid hydrogen. Yes, NASA. The agreement covers 218,000 kilograms of liquid hydrogen for NASA facilities in Ohio. The stock jumped nearly 10% on the news, but the excitement faded quickly because the market doesn't understand the bigger picture. Plug isn't just a hydrogen fuel cell company anymore. They're pivoting into AI data center infrastructure, and the NASA contract validates that their technology works. At the highest levels, artificial intelligence, data centers consume massive amounts of electricity. In many regions, the energy grid simply can't keep up. Hyperscale data centers are scrambling for alternative solutions, and hydrogen fuel cells could be the answer. Plug Power is positioning itself to provide clean and reliable power to these facilities. If they land contracts with companies like Amazon, Microsoft, or Google, the stock could explode. But let's be real. The risks are enormous. Plug is burning through cash at a dangerous rate. They aren't profitable, and if they can't secure major contracts within the next 12 to 18 months, dilution or even bankruptcy becomes a real possibility. 13 analysts currently rated a hold, with an average price target of around $2.15, essentially where it trades today. But here's the contrarian angle. If the AI infrastructure pivot succeeds, that conservative price target will look ridiculous. This is a high-risk, high-reward speculation with real asymmetric upside. Now, let's move to the second stock. And this one will surprise you because it operates in one of the most overlooked sectors in the entire market. I'm talking about Kosmos Energy, ticker KOS, trading just over $1. Kosmos is a deep water oil and gas exploration and production company operating offshore Ghana, Equatorial Guinea, Mauritania, Senegal, and the Gulf of Mexico. Fossil fuels are not a hot sector right now, but listen carefully to what just happened. On December 31, 2024, Cosmos achieved first gas production at the Greater Tortue Amium LNG project, a massive cross-border liquefied natural gas development between Mauritania and Senegal. This project has been in development for years, and it just went live. In February 2025, they achieved their first LNG production, and the first cargo is expected to ship this quarter. Once that happens, Cosmos begins recognizing real revenue and cash flow from a project that could generate hundreds of millions annually. To put this in perspective, the GTA project is designed to produce about 2.3 million tons of LNG per year, with the potential to exceed 2.7 million. That's world scale. Cosmos has a reserve replacement ratio of 137%. With 528 million barrels of oil equivalent in reserves representing a 22-year reserves to production ratio. This company is not running out of assets anytime soon. 4 analysts rate COS a buy, with a 12-month price target of $3.2, a 134% upside from current levels. But the risks are real. Cosmos has $2.8 billion in debt. If oil and gas prices fall, this stock will get crushed. Revenue dropped 24% last quarter. Operational challenges remain at the Jubilee field in Ghana. In the long term, fossil fuels face regulatory and ESG headwinds. But here's the counter-argument. Natural gas, especially LNG, is considered a bridge fuel in the global energy transition. It's cleaner than coal or oil, and global LNG demand is growing. Europe remains the largest buyer, taking 55% of U.S. shipments in 2024. Cosmos is also aggressively cutting costs, reducing 2025 capital expenditure by more than 50%. They're targeting $25 million in annual overhead reductions. If they stabilize Jubilee, execute the GTA ramp-up, and manage debt effectively, this $1 stock could be massively mispriced. Now, it's talk about the third stock, the one I've been holding back. It's the most speculative, the most volatile, and possibly the most explosive of the three. I'm talking about SoundHound AI, ticker SOUN. The stock trades around $11 to $12 now, but it was under $5 recently and still carries penny stock characteristics. SoundHound develops voice AI technology, and they're not some random startup. They power conversational AI for major automakers, restaurants, and enterprise customer service platforms. The stock has already rallied 190% in 2025, which might make you think you've missed the opportunity, but here's why I'm including it. SoundHound just posted record third quarter revenue of $25 million, beating estimates by $2 million. Earnings per share were negative 4 cents, beating expectations by 3 cents. The company is backed by NVIDIA, giving it serious credibility. They're expanding beyond automotive into drive-thrus, smart home devices, and enterprise applications. The total addressable market for voice AI is enormous, and SoundHound is positioning itself as the leader in conversational AI that actually works. Most voice assistants struggle with context. SoundHound's technology understands complex queries and adapts through learning. If they capture even a fraction of the voice AI market, the stock could run much higher. Risks? Plenty. They're not profitable. Cash burn is real. Competition from Amazon, Google, and Apple is intense. Execution matters. Analysts have price targets ranging from $16 to $26. With AI adoption still in early stages, SoundHound could be a hidden gem. So let's wrap up with a clear summary. Plug Power offers exposure to hydrogen and a potential pivot into AI data center infrastructure, but cash burn and execution risk are significant. Cosmos Energy is a deep value LNG play with a massive project set to come online, but debt and commodity price risks remain high. SoundHound AI is a fast-growing voice AI leader backed by NVIDIA, but profitability and competition are significant concerns. All three stocks are volatile, speculative, and absolutely not for conservative investors. They can swing 5 to 10% in a single session, but each one has a real catalyst that could drive significant returns if they execute. Plug has the NASA contract and the AI infrastructure pivot. Cosmos has the GTA LNG project coming online. SoundHound is experiencing rapid growth and has enormous market potential. These aren't guaranteed winners. They're calculated risks with asymmetric upside. If you're exploring speculative positions in 2025, these three deserve consideration. Do your homework. Read quarterly reports. Monitor management execution. Set stop losses. And never invest money you can't afford to lose. If you found this analysis valuable, hit subscribe, tap the notification bell, and drop a comment telling me which of these stocks you think has the most potential or if there's another name I should analyze. I'll see you in the next one.